Hello everyone and welcome to a new video with Mr. Jonathan Price, Chairman at Yanda. How are you, Jonathan, today?
Yeah, I'm not too bad, thank you. I took it easy today, got up late and took things easy. I'm still getting over this COVID nonsense, so the energy isn't there.
Oh, I can tell.
But anyway, I'm sure we'll get through this interview okay.
Today we're going to talk about gold stablecoins. But as you will remember, last week we talked about stablecoins. Could you remind us quickly what these are?
Sure, Ilaria. Yeah, stablecoins are coins whose value is determined by the price of some other commodity, like the US dollar, for example. Last week, we mainly talked about Tether, which is a coin which is supposed to have the value of $1 each. And I talked about how the Attorney General for the state of New York, Letitia James, had prosecuted Tether for fraud on the basis that they didn't actually have $1 in the bank for every Tether that they had issued. Anyway, it's a very interesting case and it's worth looking into if you don't know about it. But as many of these sorts of cases in the US, it never got to court because the parties settled and Tether agreed to pay quite a big fine as a penalty and was banned by the New York Attorney General from ever doing business in New York State. Again, they were banished from the state. So yeah, so that's what stablecoins are, a coin whose value is determined by the price of some other commodity. So today we're going to focus on gold stablecoins.
So yeah, explain to me a little bit more about gold stablecoins. It sounds very exciting. I mean, everyone loves gold, don't they?
Yeah, they certainly do. Who doesn't love gold? The idea is pretty much the same as last week, except that the value of a gold stable coin is linked to the value of a certain quantity of pure gold, like an ounce or a gram. Remembering, of course, that in the gold market, the ounces they use are troy ounces, which are quite a bit bigger than normal ounces.
I didn't know that. How big are they and why are they called troy ounces? Do they come from Troy?
Well, in one sense they do, but not the Troy that is famous for the Trojan War with the ancient Greeks. It's not that Troy. This Troy, the gold Troy, derives from the old French market town of Troyes, which is about 140 kilometers southeast of Paris. Now, this town, as I say, it's a merchant town, and English merchants have been trading there for well over 1,000 years, since the early 9th century. And they traded gold in that place. And for some reason, the name of the town got attached to the standard weight of gold. And a troy ounce today weighs about 10% more than the normal imperial ounce that we're familiar with in England and America. So we use pounds and ounces as our basic weight, or we used to anyway in England, and they still do in America. But that's the imperial ounce. The troy ounce for gold is say 10% bigger.
So are there many gold stable coins around in the crypto market?
Not that many, no. There are 5 coins that I'm aware of which are currently available to trade, and most of them are quite small, certainly compared to the US dollar stable coins. But the largest of the 5, which is called Paxos Gold, or Pax Gold for short, is traded fairly widely and can be traded on Yanda, on our platform. So our clients can get to try out investing in crypto gold if they want to. Now, one Pax Gold coin is worth the same as a troy ounce of gold. And a troy ounce today costs about $1,730 to buy. The market cap, as I said, is quite small compared to other stable coins, but it's $125 million. And that puts it at about ranking number 167 amongst crypto coins. Obviously, Bitcoin is by far the biggest and Ether is the second, but The list, which has got about 8,000 names in it, includes at number 167 Pax Gold.
So what's the attraction of having a gold stablecoin?
Well, part of the attraction is investing in something with real value, because these coins are supposed to be backed by real gold.
Just like Tether, you mean?
Yeah. Hopefully better than Tether. But there are other advantages, you see, because gold itself, if you have real gold, normal gold, it's really heavy and it's difficult to transport around. And if you have physical gold, it has to be protected. So there are security costs and insurance costs that are involved. It's quite convenient. It's quite inconvenient to hold real gold. So most people invest in gold through ETFs or through gold shares. But the problem with that is, if you don't own the real gold, you only have indirect ownership. And that could go wrong. I mean, if we had big trouble in society or in the economy, these gold ETFs could fail. So the sort of people who like cryptocurrencies because they're independent and not related to any government and not dependent upon anybody else could well be attracted to gold stable coins, because in theory, at least, they give you direct ownership of a portion of a gold bar held somewhere. So it is as good as holding the real gold.
Interesting. Do you see there being many more gold stable coins then?
Well, it's an interesting question, because you see, there is a little bit of a barrier to entry with stable coins, particularly gold stable coins, because if you want to start a stable coin, how do you do it? Do you have to have all the gold, or even all the dollars in your account before you launch your coin? That would be the safest way to do it, of course, but it's really expensive, which is probably, I guess, why Tether didn't do it that way. But with a gold coin, you can imagine, if you had to buy all the gold, or if you had to have all the gold in your account before you started, that would be really expensive. And if you haven't actually got the gold, why should investors buy your coin? It's a sort of chicken and egg problem. No, which comes first? Do you have to have the gold holding first, or can you issue the coin first and raise the money afterwards? Now, as I say, this is a bit of a barrier to entry, but by chance, the other day, I came across a company which has got a really novel idea of how to solve this chicken and egg problem. And that company is called Auric. That's AURIC. Auric is planning to launch a new gold stablecoin. In fact, it may already have done so, although I haven't seen the news. But it doesn't have the cash to buy the gold up front. So it's found a rather sort of novel and innovative way to deal with this problem. It's entered into an agreement with a gold mining company called Bluebird Merchant Ventures. This company is listed on the AIM market on the London Stock Exchange. Now, Bluebird owns a couple of old gold mines in South Korea, and it wants to reopen the mines and start mining again, because there's still lots of gold left there. And under this agreement with Auric, it gives Auric the right to purchase Bluebird's gold production at a discount to the market price in exchange for financing the production costs. So Auric will get the gold for a really good price and only has to raise a proportion of the cost, because it's only financing the cost of production, not the whole cost of the gold. So I thought that was a really innovative approach to solving this problem. I have no idea if it's going to work or not, but I'm going to keep monitoring the situation and let you know in future sessions whether actually Auric and Bluebird together have managed to get this to work.
Thank you very much. That sounds really exciting. And actually, if I have to be honest with you, a little bit complicated. So I'm glad that you're actually here to explain it. I'll say let's end there to give our listeners a chance to digest all this information.
Yeah, and to do their own research, of course. In the meantime, of course, there's nothing stopping them getting their hands on a little bit of gold crypto stablecoin, because as I said, Pax Gold is available to trade on Yanda against Ethereum and Bitcoin and some of the other main cryptos. So they should have a go at that. I'm certainly going to.
I think I will too. Thank you very much, Jonathan, for joining us today. And
That's
I hope
okay,
to see you
Ilaria.
soon
Yep, see you soon. Bye now.
in the next video. Bye-bye. Thank you.